Hello everyone, I hope you're having a fantastic day. Welcome back to my YouTube channel where I pretty much shared as to what I know about smart money. If you want to take a peek up in my notebook, see what it is that I've been learning about lately. I myself am no expert in the financial markets. I am just a student watching YouTube videos about how to improve reading the charts, and therefore my words shouldn't be trusted. So I'm gonna leave a disclaimer and I'm gonna leave it at that. So let's get started, shall we? So today's video, what I want to talk to you about is how is market structure made? Now, market structure in itself is very fractal in the sense that it repeats over and over again, but it all depends on the context that you see it upon. Now, remember, the way that I draw my market ranges is the following two criteria, right? One is either tapping on imbalance or it's tapping liquidity. One of the two. That's it. So let's take a look at one example right here. I'm looking at Australian dollar, and we see that we had a very big dip down to these relative equal lows. I'm going to mark it here, relative equal lows. And so therefore it triggered some sell stops that are in the market. And of course, as you may know, each seller needs to have a buyer. So as people were selling here, smart money was buying up these orders in order to take it back up. So because we dipped down into these relative equal lows, I want to make that my foundation towards the market. Now, in this YouTube channel, I always keep talking about the 3 bar pattern. It takes 3 bars for it to create a swing low, and we confirm it with a swing high. So if we look down even closer to this, you'll see that the close here is 57426 and the open here is 57426. Now, because this is Forex, I like to include these two equal candles as like 1 bar. So I'll make this my first bar right here, this low candle. I'll make these two my second candle, and this my third candle. And how do we confirm it's a swing low? We include the third candle right here. And now anything moving upwards is just what's it called? A takeoff of the swing low. So if we are to create our range pattern, I like to create it like this. This is our swing low. And is this a swing high? I don't know. Well, let's see. And here's the part where things are beginning to change in this YouTube channel, because I'm not including the bodies anymore like I used to. Instead, I'm actually including the wicks now. And so we have our 3 bar pattern right here. 1, 2, 3. Why? Because this high was less than this candle's high. And then the next following candle has a lower high compared to this high. So that's my 1, 2, 3. And how do we confirm that this is a swing high? Boom, we have our fourth candle right here that breaks. I guess that breaks the structure. So then that's where we have our swing high. Now, notice how much of a retracement we have in this range. You'll see that we barely come back down to discount, and instead price shoots back up into another form of swing high. You see our 1, 2, 3, 4, the swing high right here. We just keep extending this range over and over again, no matter how many times price keeps breaking out of these highs, right? And therefore creating this extension of this range. See, once again, we didn't head back down to equilibrium. So what do you guys know about equilibrium is that it's fair value. So you guys will learn about the fair value and how market tends to retrace or head back down to fair value levels in order to accumulate or distribute their orders. So that's where you're going to be mostly seeing some pretty good entries, in my opinion. But again, it just depends on context, where we are in the market, what kind of range have we created. As you can see from this range right here, what did we notice? Was it very difficult for price to create lows in the market? Was it easy for price to create something like this? Well, some of you may say yes, but in my opinion, I don't think so. The things I believe that this range is pretty straightforward. In the end, we have this range that honestly should have no problem coming back down. So this range I would consider a low resistance liquidity run kind of structure. So as price, and as you can see, because we're looking at this as hindsight, price is creating these lows, taking it, lows, taking it, lows, taking it, lows, taking it, and it's happening very easily over and over again. Whereas the highs, look at this. If we start creating a reversal range, you'll see that the highs are becoming more challenged. So from from up here, from up here to down here, look at these highs. very, very protected, almost like. And price has like a hard time coming back up to these highs because there's a lot of pressure keeping it from doing so. So as it's developing more and more and more, look at how every time it's going down with a lot of force, right? Because again, it's easy for it to keep going down because there wasn't enough backing within the foundation of the structure. So it keeps going back down. But now we're creating this other new range that I like to call my B range. My pattern strategy is the following. I would like to see price react off an intermediate range, right? Where we bounce off and start creating something else, short term or a lower time frame range that attacks, some form of liquidity up here. Uh, I prefer if it were to occur somewhere in the OTE area, but again, I can expect price to react off something from here, maybe a mitigation block, a breaker block, or a rejection block of some sort, and or maybe even the highs, and then half price kind of distribute down here. Now, where would I like to see this form of price action? Good question. If price were to create that kind of structure here, I wouldn't take it. Why? Because although we may be reacting off an intermediate kind of a high, or therefore we are in premium, the long term is saying that we're still in discount. So I wouldn't want to participate in something like this. This makes more sense to me that we are reacting off a premium level in an intermediate range based off a premium level of a long-term range. This to me makes more sense. Now we're in the premium of a premium. Now, how is this not more high probability that price will react something off here, right? Whether again, that could be a fair value gap, it could be an OB, a rejection block, mitigation block, something, or even the equal relative equal highs that made the structure up here. So let's keep that in mind. I'm gonna move that here for the time being, and you'll see what's happening. We have a long-term trend, intermediate trend, and look, the first level right here. There we go. 1, 2, 3. So what makes this a swing low? Remember what I just said, the 3-bar pattern. But now I'm including wicks. So again, we have the 1, 2, 3, 4, and then whatever. Again, this in itself is a range as well. But I don't like to label it as such because it's too distracting for me. I'd rather just see it as like a line that goes down and back up. So as we're retracing back up to these levels, notice that now we're on premium levels right here. We're reacting off this rejection block and it came back down. However, price had the means to keep going up to these levels really deep into the optimal trading entry level and whatnot. And look what ended up occurring. We have a POI right here. You can call this your fair value gap or whatnot right here. So price reacts off this fair value gap in a structure that is a premium of a premium zone inside another higher time frame premium zone. So it'd be best to see something here in the hourly range or something that can get you into this entry. But that's not what I want to talk about right now. I'm not going to talk about where to place your stop loss or whatnot, just in terms of logic. And now, as I explained before, because we broke the structure, I don't delete it. I continue to develop these swing lows. And look what happens again. Price, although creates all these swing lows, it again goes into equilibrium. And remember what y'all learned about equilibrium is that it's fair value. It's fair value for the market to distribute in these areas. If it's going to sell, it's a good area to distribute. And then look, we break lows again, we come back down, we break lows again, we come back down, and then look, once again we had a rally up, got these buy stops here, but look at where we reacted from. Another OTE, optimal trading entry. And once again, boom. Now this happens over and over again. You see now, that's where we are kind of now. Back in February of this year, 2023, we had the Australian dollar react off this fair value right here in equilibrium, and it kept going down. Now we're gonna be heading over into the 1 hour. We're gonna see something similar again once more. Remember, so we need to have the 3-bar pattern with wicks included now, and we would like to see the beginning of the structure either tap liquidity or rebalance and imbalance. That's it. So in this case, for example, we're going to tap onto the buy stops of these relative equal highs right here. Tap on it here. Well, We have our 1, 2, 1, 2, 3. Keeps going down. Okay, and then we break lows again. We keep going down. Look at that. Big tap on liquidity here. Okay. Big tap on premium there, sorry, and then keeps going down. Now we're going to create that reversal. You'll see that we have the 1, 2, 3, 4. That's confirmed for swing low. And look at here. 1, 2, 3. Doesn't break here, 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 doesn't break here. Here's where it breaks. This is our swing high right here. We got 1, 2. Oh my goodness. See, we got our swing high right there. And then look what happens. Price creates that pattern again where we have an intermediate range. We create our swing high. Look at that. Very, very nicely. Now we're in an OTE on discount based off a higher time frame discount. And price creates a fractal here. And then boom. Based off a fair value gap. You can't make this stuff up. It's crazy. Look at that. OTE and fair value gap. If you could find a fractal here, that'd be even better. Your stop loss would be insane. And look, it went up, just up, right up, back to premium. But look, it tapped on fair value of the higher time frame range. And that's it. So that's another example in which price reacted off, this structure and how I'm just trying to demonstrate to you how is it that price is behaving inside of internal range liquidity. And I mean, this is all internal. Remember, this is an internal range liquidity right here. And we're setting our profit targets back up to these levels. But why don't we see? This is what I'm talking about. Why doesn't it make sense for us to, enter here and then exit at the highest highs? Why doesn't it? Because price is in a sell program. The price doesn't want to seek, guys, remember, sorry, remember, we're developing this very higher time frame structure that keeps breaking lows. So we are in a higher time frame sell program. Why are we looking or expecting for price to come back up to these relative equal highs where the narrative right now is that it should be selling? So we should be very cautious in getting into buy orders right now. Buy orders are very, very risky right now in this environment. And for 3 days, well, in this case, for 3 days, it was very dangerous for us to get involved in that matter. So instead of aiming for external range liquidity, which is this big long-term range, I would be placing my take profit very carefully down to a scalp. Remember, we are in a higher time frame, low resistance liquidity range. So price has no problem taking out the low quickly with force. So actually getting ourselves into this buy is very dangerous and very risky. And again, price reacts off this fair value gap. We get a little buy. Then you could have just aimed for, you could have aimed for these buy stops right here. You could have aimed maybe for the consequent encouragement of this fair value gap. Maybe even aim for the fair value of this higher time frame range. The point is that what I want to show you is how is it that market structure forms its ranges. How is it that those ranges guide us into interpreting where price is, premium or discount, and how price creates price action, which forms another range within this intermediate range to tackle some form of, imbalance, some form of PDRA, right? You got your mitigation block, rejection block, OB, something to that effect, or even a fair value, creates that point of interest that we can seek our fractal in, which you could probably find something down here in these 3-bar patterns again, that we can aim towards our goal based off narrative. But because of narrative, we have to be cautious and not seek such a high reward. Instead, keep our wins to a minimum because we are in a selling program. So we don't want to go up above external range liquidity. Just want to keep it low. So yeah, that's kind of like a peek at my notebook as to how it is that I've been learning about price lately. It helps a lot more when you combine your signal strategy, I guess, and mixing it with some form of storytelling. It doesn't really make sense, like for price to continue onwards if the conditions right now are to sell. Is this trade taking place within a kill zone? That's going to help us, make it more high probability because there's more engagement. But yeah, that's just a brief look, I guess, into my notebook as to how is it that I've been learning smart money concepts. And I hope you learned something from this, because I pretty much just gave you my entry strategy for free here on YouTube, and it's crazy, right? Because I mean, who really is watching this YouTube channel anyway? I'm pretty small right now, but as the more I make these videos, the more better I feel, more confident I feel about articulating my ideas, and as well as just being overall more open into how I interpret the market. So yeah, I hope you like this video. Do the like thing, give it a comment. Let me know what you have any questions. Was there some things that I wasn't clear on? Was there some things that I've missed? Was there some questions you want to ask me? Perhaps maybe I can help you out, because we're all in this together. We're all trying to learn what the heck this SMC really is, uh, and just overall, just trying to become better versions of ourselves. So yeah, let me know what you are thinking about, and hopefully we'll be having a conversation down in the comments. So yeah, let me know. All right. Have a good evening, everyone. Take care.